A global perspective on economic volatility, asset allocation, and the rise of AI. 1. Introduction, Life in Geneva and Career Background. The discussion begins with a personal narrative about life in Geneva, including a near brush with lightning and reflections on a decades-long career in wealth management. The speaker describes their journey from the UK to the Cayman Islands, and eventually to Geneva, choosing stability and longevity over what might have been a more exciting professional path in Hong Kong. Although now retired, the speaker continues to provide voluntary financial advice focused on tax, residency, and investment strategies. Footnote: This section introduces the speaker's international background and ethos of post-retirement financial mentorship. 2. Favorite locations in Switzerland. The speaker highlights Switzerland's natural beauty, with particular affection for Zermatt and Lauterbrunnen. While noting the luxury retail scene in Zermatt, the speaker emphasizes the accessibility of travel in Switzerland for non-wealthy individuals who seek affordable lodging and immersive experiences like skiing and hiking. The scenery is described as breathtaking and culturally rich, drawing attention to hidden gems and iconic landscapes. Footnote: The speaker underscores Switzerland's appeal beyond luxury, encouraging travel and exploration through nature and affordable lodging. 3. Observations on U.S. market volatility. Addressing recent market activity, the speaker reflects on the unpredictability of the U.S. stock market, referencing historical episodes such as the tech bubble of the late 1990s. While acknowledging a mistaken forecast of a bear market, the speaker pivots to re-engage with equities, illustrating the challenges of predicting market tops and bottoms. Emphasis is placed on the tendency of markets to defy economic fundamentals, often driven by sentiment and capital flows. Footnote: Market behavior often deviates from economic theory, highlighting the difficulty of predicting corrections or rallies. 4. Federal Reserve policy and debt ceiling implications. This section details the historical and ongoing impacts of quantitative easing, K, and quantitative tightening, QT, particularly in the context of the 2008 financial crisis and the COVID-19 pandemic. The speaker criticizes the Federal Reserve's ineffective rollback of its balance sheet and highlights the looming need for the U.S. Treasury to borrow heavily after lifting the debt ceiling. Emergency fiscal measures and the risk of technical default are also discussed, though deemed unlikely. Footnote: The Federal Reserve's monetary policy remains reactive and politically influenced, with major implications for asset prices and government borrowing. 5. Interest rates and structural risks in the bond market. Citing rising long-term yields, the speaker warns that markets are pricing in a worsening fiscal outlook for the United States. Japan is noted as a traditional buyer of U.S. Treasuries that may no longer be reliable due to its own economic challenges. The speaker predicts eventual Federal Reserve intervention through renewed K to suppress yields and stabilize markets, even if that conflicts with the institution's nominal independence. Footnote: Interest rate increases and unsustainable debt dynamics may trigger renewed central bank intervention in the bond markets. 6. Contradictions in global markets and sentiment. Despite poor macroeconomic signals, such as downward earnings guidance from major U.S. corporations and falling consumer confidence, equity indices have continued to rally. The speaker attributes this paradox to the rise of artificial intelligence and speculative capital flows. While unemployment remains low, early indicators such as reduced hiring in international organizations and weaker discretionary spending hint at underlying fragility. Footnote: Market optimism contrasts with corporate earnings cuts and global economic uncertainty, signaling potential disconnects. 7. Artificial intelligence and workforce transformation. AI is accelerating productivity in white-collar sectors at unprecedented speeds. Prompt engineering is highlighted as a critical skill to retain employment in the age of automation. The speaker forecasts widespread workforce segmentation. Those who integrate AI tools effectively will outperform peers, while others risk obsolescence. AI's non-human advantages, no sick days, no wages, 24/7 operation, underscore its disruptive potential in labor markets. Footnote: AI adoption will drive organizational bifurcation between high-output, tech-savvy employees and those rendered redundant. 8. Commercial real estate and the post-pandemic office. Post-pandemic work patterns have reduced urban office occupancy, pressuring commercial landlords and surrounding small businesses. The speaker discusses downstream economic consequences and proposes potential adaptation strategies, such as converting office spaces into residential units. A key challenge is productivity monitoring in remote work environments, which may eventually be resolved through AI-powered surveillance systems. Footnote: the shift to hybrid work models endangers commercial real estate viability and necessitates novel productivity metrics. 9. Investment recommendations during uncertainty. The speaker outlines a diversified asset allocation strategy favoring precious metals, undervalued foreign equities, and selected cryptocurrencies. Gold is emphasized due to central bank demand and geopolitical distrust of U.S. financial hegemony. European and Asian equities are recommended based on favorable valuations and dividend yields. Bitcoin is acknowledged as a safeguard asset, especially for high net worth individuals seeking anonymity and borderless liquidity in crisis scenarios. Footnote: diversification into real assets, undervalued international equities, and cryptocurrency may mitigate risks associated with U.S. fiscal instability. 10. Final thoughts and resources. In conclusion, the speaker encourages viewers to adopt a forward-thinking investment philosophy centered around resilience, real assets, and digital literacy. Prompt engineering and independent research skills are advocated as professional survival tools. Free educational materials are offered via LinkedIn, with supplementary commentary available on the speaker's YouTube channel, where weekly content addresses macroeconomic trends and investment strategy. Footnote: the speaker invites continued dialogue and self-education to navigate complex, evolving financial environments with greater agency.